What makes Cardano ADA a valid option even after the slew of downturns it has encountered? If we look at everything revolving around Cardano, including its token price and ecosystem, this question is not a mysterious one. The cryptocurrency can only get kicked out of the market if it no longer has any cards to play in its favor. There's something about Cardano ADA that is extending its spread of dominance. That's what we've been trying to figure out. In October, crypto markets suffered one of the worst drubbings despite the welcoming inflation data for the month. Bitcoin briefly drove to as low as $34,970 from a near $36,600 level. Ether tumbled almost 6% over the same time frame, losing the $2,000 level it had regained for the first time since July, on BlackRock's Spot ETH exchange-traded fund filing. Large-cap altcoins such as Dogecoin's Doge, Polygon Matic, and Tron's Tron native tokens endured a 6-7% decline. Meanwhile, traditional markets were all in on the idea that the Federal Reserve was done with rate hikes and indeed could be cutting rates in the first half of 2024. However, it was not so. The action in the bond markets was even more dramatic, with a 10-year Treasury yield plunging 20 basis points to 4.44%. Panicky action had been previously taking the yield above 5% for the first time in more than 16 years. Despite the rough session for crypto, slower inflation and lower bond yields may support prices. Investment management from Grayscale asserted this belief in a report. We believe the recovery in the crypto valuations can continue if real interest rates peak and we continue to see progress towards spot ETF approvals in the US market, the report explained. An expert also noted, ETF speculation is front and center for now, but the store of value narrative still holds and will give the asset a resilient and increasing floor. I very much doubt that the recent sell-off means the rally is done for now. According to K33 research analysts in a market report, in this scenario, momentum might slow in the crypto market, as there will be likely multiple weeks to wait for significant news relating to ETFs. Now, what about Cardano ADA? Crypto analyst Fiery Trading has set an impressive bullish forecast for the price of ADA, suggesting a 9,990% surge to $35. This prediction was based on the assertion that ADA has surpassed its lowest value and is now steadily climbing, hence a recent positive trend in its market performance. The predictions hint that ADA, which is currently hovering around the 39-cent level, could witness a meteoric rise if the market continues to follow the upward trajectory. On the price charts, the analysts examined a parallel channel pattern formed by connecting the peaks of two bull markets and mirroring that line at its lowest point during the 2020 pandemic dump. If ADA's coin price were to reach the proposed value of $35 per coin, given its circulated supply of $45 billion ADA, the total market cap would surge to an astonishing $1.58 trillion. This value would not only dwarf its current market cap of approximately $12.66 billion, but will also surpass Bitcoin's market cap. This intriguing scenario strikes as overly optimistic as a result of current financial trends and market supply dynamics. But this is the crypto market, and anything can happen, right? Well, while this forecast sets an enthusiastic tone within the Cardano community, the anticipated rise to $35 is not expected to occur until around 2025, a period that has been projected to be the next bull market peak for ADA. Of course, this is a form of long-term perspective, and it requires a sustained momentum that is possible on a myriad of market factors and developmental milestones that are yet to be realized within the Cardano ecosystem. Plus, the Cardano ecosystem is not just lazing around, expecting top-ups in price. A development recently added to its momentum and involved the news of the Cardano founder Charles Hoskinson being interested in a collaboration with Kraken to create a Layer 2 network. Charles Hoskinson reportedly reached out to Jesse Powell, the co-founder of Kraken, through X with the message, "I'm game on if you are." This proposition came on the heels of Kraken's announcement regarding partnering efforts with notable blockchain developers such as Polygon, Matter Labs, or Nil Foundation to develop their L2 solutions. Also, Cardano has been involved in certain reports lately, not just for its token price or updates, but for situations happening within its community. These are what crypto analyst Ben Armstrong loves to refer to as non-Cardano reasons. In a blog post, Ethereum co-founder Vitalik Buterin brought the blockchain community's attention back to Plasma, a scaling solution first introduced in 2017. This resurgence was attributed to technological enhancements, especially in the realm of ZK snarks, a form of cryptography that improves security and efficiency. Plasma was originally set aside in favor of roll-up technology and faced challenges in client-side data storage and adaptability. Buterin's new proposal suggests that these limitations could be surmounted, thus making Plasma a viable solution once again. We called this a revival. Buterin outlined how validity proofs, particularly ZK snarks, could simplify Plasma's framework. According to him, these proofs guarantee the authenticity of each block on the plasma chain, reducing the state that users need to download and permitting potential instant withdrawals in certain cases. In addition, Buterin proposed extending this technology to Ethereum's virtual machine using a parallel UTXO graph for Ethereum and ERC20 tokens, making the complexities associated with the account-based systems easy. This approach could improve user experience and security on Ethereum's blockchain. However, it was at this point that the Cardano community perceived foul play. The Cardano community raised concerns about Ethereum's latest direction, accusing Ethereum of replicating ideas from Cardano's Hydra, a Layer 2 scalability solution. The goal of Hydra was to increase transaction speed and scalability on the Cardano network using state channels, a notion similar to Plasma. Posts and tweets from prominent community members, including Charles Hoskinson himself, labeled Ethereum as a copycat, which was borrowing ideas pioneered by Cardano. This is not a surprise. For the longest time, there have been jabs thrown at Ethereum by the Cardano network, and of course vice versa. We are aware of the history between the Cardano founder and the Ethereum co-founder, and the endless rift between the two ecosystems is a significant source of worry. However, if Ethereum truly borrowed Cardano's ideas, then it must mean just one thing. Cardano is a model platform, and its influence is greatly acknowledged. Apart from Cardano and Ethereum rift, there has been a series of contentions in the crypto market. A bull season is imminent, and prices are slowly coming to acknowledge the expectations of the season. There have been a ton of predictions, such as the one proposed by Fiery Trading for Cardano ADA. There have equally been arguments about price predictions and upcoming benefits for the entire crypto industry. It's like every expert has something to say. In a CNBC interview, Cathie Wood, CEO of ARK Invest, made bold predictions about the future of cryptocurrencies, asserting that she expects the cryptocurrency asset ecosystem to scale up to a mouth-watering $25 trillion by 2030. And this is not the first time that she has made a similar prediction. Her forecast came as ARK Invest prepares to launch 5 new exchange-traded funds, or ETFs for short, focused on various aspects of the crypto market in partnership with 21 Shares. Wood added that she was very impressed by some questions asked by the SEC. She said she did not understand SEC Chair Gary Gensler's alleged animosity towards Bitcoin, given his profound knowledge about the asset. Cathie Wood acknowledged the role of expectation on the market, suggesting that some of the price increases could be attributed to speculation on the ETF's approval. "I'm sure that there's some anticipation and there could be a sell on the news," she said. Nonetheless, Woods hammered on the importance of underlying fundamentals in assessing Bitcoin's value. Referencing ARK Invest's monthly Bitcoin reports, which indicated a bullish market trend, she said, "It seems like a bull market." Furthermore, she highlighted Bitcoin's resilience and potential, especially in the season of economic uncertainty. Bitcoin went up from $19,000 to nearly $30,000 as the regional bank stock was imploding. There was no counterparty risk in Bitcoin, she added. According to previous reports, Cathie Wood had predicted that Bitcoin's price could reach $1.5 million per coin, with her assurance boosted by the regional ban crisis in March, perceiving the flagship cryptocurrency as a hedge against counterparty risk. The ARK Invest CEO first invested in Bitcoin around 8 years ago through her firm. However, sometimes the firm appears to be blockchain agnostic. Regardless of the uncertainties, this is evidence that things will get better in the crypto market. It is only when these predictions are confirmed that Cardano will be able to deliver once again. But that's going to do it for today's video. Make sure you hit the subscribe notification buttons, and we'll see you in the next video.